balance sheet, you're trying to see basically the assets and liabilities as well as capital. That's what you're comparing. And it is all comes from one equation which we call the what? Accounting equation, which is simply assets. How together? Yeah. Plus liabilities plus
owner's equity.
Owner's equity. Okay, there we go. So our financial equation is given like that. So you'll find when we are doing a balance sheet, we tend to divide it in half, at least at my level, which I remember. And here you have the assets. Then here you start with liabilities, and then you end with owner's equity. But at the end of it, the sum totals of these two columns have to be equal, meaning that the assets is equal to the sum of the liabilities and owner's equity. That is what I remember. So assets, there are current assets. Examples can be cash, debtors, stock, prepaid expenses, and standing orders. Those are current assets. Intermediate assets, we have machinery, blades, and livestock. Then fixed assets, we know of land, building, can be fish ponds for agriculture. Those are assets, current and fixed. Those are the main two. Then liabilities. For liabilities, current liabilities, these are examples. We have trade creditors. Those are customers you give goods without paying. We have bank overdrafts. We have short-term loans, among others. Then for long-term, we have bank loans, bonds, and departures. Intermediate, you can talk of debt maturing in 1 in 10 years. Okay. Now, owner's equity is simply owner's this is simply capital plus profit, capital plus profit minus drawings. So owner's equity is capital plus retained profits minus drawings. That's how we find the owner's equity. All together? So a balance sheet, you have assets, then liabilities and on the other side, and owner's equity. Now we are going to look at income statement, which is basically profit and loss. So income statement, right there on the phone. Income statement, which is profit and loss statement. Capital plus profit minus drawing.